Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. The large equity markets in Asia-Pacific rose 2% to 3.75%. Stoxx 600 in Europe has risen and is now up 2.2% in late morning turnover. U.S. futures indicate a gap larger opening. The greenback is mixed. The dollar bloc and Japanese are more flexible, while the Aussie is off 0.4%. Lower yields are a great way to help gold. The yellow metal was at $1,615 a week ago and is now pushing past $1,700 to almost $1,711. Oil is still firm ahead of the OPEC Plus decision tomorrow. A sharp reduction in output is expected. December WTI is close to yesterday's peak of $83.50. Asian Pacific market. The Reserve Bank of Australia stated that it would reduce the pace to quarter point after 4 half-point increases. RBA raised its benchmark rate by 25 basis points to 2.6%. This smaller move prompted the largest intraday drop of 3-year yields from October 2008 and a 3.75% rally on the equity market, which was the largest June 2020. After settling in North America at $0.6515, the Australian dollar was traded for $0.6450. Tokyo's September CPI was 2.8%. This is down from 2.9% in August. The underlying measures remain stable. The core rate, which excludes fresh foods, rose to 2.8% from the previous 2.6%. Yesterday, the dollar climbed above JPY 145 for the first time since September 22 BOJ intervention. However, today it has remained in a narrow range. Market of Europe. After last week's dramatic movements, the UK is still recovering. Sterling is trading at $1 and 1,430 cents, close to its September 20 levels. The government has dropped its plan to reduce the top income tax rate. This is one of the most controversial parts. The Eurozone's producer prices continue to rise. After a July 38% increase, they rose 5% in August and are now up 43.3% year over year. Tomorrow we'll see the release of the composite PMI and final September services. The euro reached $0 and 9,900 cents, the highest level since September 22nd. Nearly $0.9950 is the next target. Market of America. Today's factory orders are available. The factory orders, which exclude transportation, held up very well this year. It was almost like a wall had been erected, as other time series indicate. Factory orders, excluding transportation, fell by 1.1% in July. The U.S. also releases the JOLTS report about job openings at the same time. This will attract the attention of the market. 5 Fed officials are expected to speak. Canada reports August building permits fallen for the 3rd consecutive month. Yesterday's CAD 1.38 plunged to 136.20, and the US dollar fell back to CAD 1.38 yesterday. It recovered to almost 136.50 in the European morning. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.